Let's talk global commodities. Global commodity markets have taken on a bearish turn as traders in different markets review the impact of the recent outbreak of the coronavirus on their respective markets. While the market for metals has remained stable and flat, the market for primary agricultural goods has kind of dipped over the last few weeks. Petroleum market has been glum as the Organization of Petroleum Exporting Countries, OPEC, and its non-member allies consider options for keeping oil prices up. Joining me in the studio to discuss the agro-commodity market as well as oil is the head of research of financial derivatives, DAMILOLA. DAMILOLA, hello. Welcome to the Global Business Report.
Thank you, Rotus.
Good to have you in here with us.
It's good to be here.
So what are the burning issues? Take us through the burning issues.
Okay, as you can see, we have quite a few, and we're all aware of the NBS, which released its January inflation numbers yesterday.
Yes.
And the increase was actually higher than what we expected, because in the FTC, we were projecting a 12.08% inflation rate, but you can see that the pace of increase was higher, to 12.13,
yes.
And this is the fifth consecutive monthly increase. And we're also aware that the IMF has concluded its Article 4 review on Nigeria, and they came up with some interesting highlights, yes.
But negative, Abby?
Oh, yes. As in, they still have some concerns, and their concerns are still typically the same thing.
Yes.
Look, you have to ensure a cohesion between your fiscal and monetary policy. You need to adjust your currency, your inflation rates,
yes.
there are pressures there. You need to address debt issues. So the concerns are still pretty much the same thing, and they revised the growth forecast down to 2% from 2.5%.
So we're not listening to their continued recommendations. It seems like we're not listening. Well,
I know that the government has its Economic Advisory Council,
yes.
And it has its other advisors. So I believe that the government also is listening to the IMF. Yeah.
Okay. So what else do we have going on here?
Okay, we can also see that African countries, most of them are actually undervalued, but countries like Nigeria and Ethiopia
yes.
still operate an overvalued currency. And we'll talk more on that, but that was just what the economist flagged out in one of his recent reports.
Okay.
And then obviously Brent is trading right now, as at this morning, was trading at $58, and crude oil has been volatile, obviously because of the severe impact of coronavirus on the current, on the crude. Yeah.
Crude. Huh? Okay, so let's move to our next slide here. As we go through. So I think we're starting with what, oil? Yeah?
We could start with oil.
Okay.
So like I said earlier, coronavirus is a major topic right now, and obviously started in China, and China is the largest oil consumer, and so that is what is affecting the price of that crude right now, that commodity. And what we're seeing now, a lot of energy analysts actually revising downwards their forecast. We know that even the EIA is revising its forecast down to about $61 per barrel. And of what relevance is this to Nigeria? Nigeria depends hugely on oil prices.
So we're in soup.
Well, if you put it that way,
next slide up here.
If you put it that way, our budget benchmark is at $57, and right now $58. That's just barely $1, $2 above our budget benchmark. And again, if you go to the IMF, it was one of the things that they raised, that look, you have revenue issues, your external vulnerabilities are increasing because oil prices are volatile right now. So whatever happens to that commodity would affect Nigeria in terms of its reserves, which are now below $38 billion. Right. That is quite worrisome. It will affect the terms of trade because our export prices are falling faster than even our import prices, and also obviously the currency. Then it speaks back to the issue of the naira being overvalued.
Okay, we've just talked about the impact now, but what are we seeing here? So at least we have some good news.
Oh well, yes.
Something
well, and
good.
A lot of Nigerians will actually question that figure. That yes, it's above 4,000 megawatts, but again, is it stable? And bear in mind that the cost reflective tariffs are going to kick in April. I received a message I saw on Twitter that Ikeja Disco has informed its residents that by April it's increasing the tariffs. So yes, Nigerians don't mind paying, but let there be stable power supply.
That's the key. And then the downers there, of course, what we just talked about with regards to inflation, yes?
Yes.
And as far as that, go ahead.
And so for inflation, why this is very worrying is because month-on-month inflation in the past 2 months has actually been declining. And we usually look at that, even the monetary authorities look at that because it's a better reflection of what is happening in the market. But now, month-on-month inflation also increased. So that just shows you that the inflationary pressures that were benign before are becoming more potent. And you just talked about the Bankers Committee meeting that held yesterday.
Yes.
The Monetary Policy Committee is going to meet next month, March 23rd and 24th. And definitely inflation is going to be a front-burner issue. And bear in mind, the CBN has said that inflation rate at its current level is growth retarding, and that was in at 11.98. This is 12.13, and inflation is likely to continue to increase because, one, in February, VAT increased, the new VAT rate kicked in.
Yes.
But we just talked about cost-reflective tariffs, which are going to kick in April. We had the Okada ban in February, and obviously there were some transport costs that increased. So the factors that are going to push up consumer prices are increasing. So that is going to be a major issue. The CBN may decide to adopt a more conventional method and even tighten further, because that is price stability is the central bank's primary objective.
Interesting stuff. So our next slide here. Okay, so oil. We've discussed that. Yes.
Yeah, I mentioned the EIA. Yes, about its forecast to $61.
And we're still revenue. Okay, agriculture now. Yes, let's look at what's happening over here.
Yes. Okay, so if you look at this slide now, we have a combination of some of Nigeria's imports and one of its exports. So if you look at wheat, corn, and sugar, yes, we are seeing a decline in the prices of the imports.
Across the board.
Yes. So a decline in your import is a good thing because obviously your import bill is reducing. Right. But earlier I mentioned the terms of trade, which actually measures the changes in your export prices versus the changes in your import prices. So see now, all the prices declined. Cocoa declined. All prices have been relatively volatile. So our terms of trade are not looking quite favorable at the moment. But now let's go into specifics. Wheat, as we can see, has declined. And basically for all of them, commodities are being affected right now by the coronavirus. Right. And it's not even in terms of the commodities market, even the stocks. We know that Asian stocks have tumbled. We know that Apple has actually issued a sales warning about a possibility of its revenue declining in its sales because China is its largest market. Right. So in terms of whether the demand, in terms of the supply, because it produces most of its Apple products and iPhones in China. So that is what is affecting the market. Even Singapore, the Financial Times released an article about the Singaporean airport, which is the busiest airport. As in, if we look at it, based on the analysis they showed, there's been a significant drop, all because of that coronavirus. So that is what we're seeing playing out right now. So demand is slowing, and obviously there's an increased global supply. So you're having a global supply glut amidst declining demand. So that's what is pushing these commodity prices down. And for cocoa, what's happening is the weather conditions in Ivory Coast and Ghana. Those are the two largest cocoa producing countries. So obviously whatever happens to those countries would affect prices because they're the price leaders in this market. And the implication for Nigeria also produces cocoa, about the 5th largest cocoa producer. So definitely we want our cocoa prices to increase so that we can benefit from higher revenue. Okay, we've only got a couple of minutes left. Let's pick up the next slide. Outlook for oil. What do you see happening? Okay, so for oil, we are of the opinion that it's still going to remain in a yo-yo situation, yes. And then we're yet to get a clear perspective about the outcome of the OPEC Plus meeting. Yes, they've said that they want to tighten further. Russia is still sitting on the sidelines as to whether it's going to support this or not. But if at all they actually go ahead to implement this cuts, bear in mind that it's going to be in addition to what they had agreed in December. Definitely it will have significant implications, especially for countries like Nigeria. If Nigeria is affected, that means our quota might move from 1.7 to maybe 1.6, 1.5, which is negative for us, meaning that we'd have to reduce our production further. Then it goes back to our revenue benchmark. It goes back to our projections. Right. It goes back to our fiscal deficits, meaning that obviously the fiscal deficits will widen, meaning you have to borrow more. So it's a cycle that keeps going on. All right, our final minute here, agricultural outlook. How do we see things? Yeah, so for sugar, at least for the grains, we see that obviously the demand from China, which is the main, the slowing demand from China, is going to continue to be a major impact on it. And for cocoa, we expect that the unfavorable weather will continue in Cote d'Ivoire and Ghana would actually have a positive impact because it affects supply. And if supply is affected, that should push up prices. DAMILOLA, Head of Research at Financial Derivatives Company Limited. One of my favorite people. Thank you so much for joining us.